The Drill Down is a segment where we drill down into the nitty-gritty of a stock on the move. And what better subject for a drill down than Red Hat? Reported earnings just after the close. Now, the stock is up 10% in after-hours trading. That's after rising 33% in the last year. Now, Red Hat's already trailing at a robust 82 times trailing earnings. The stock moves are a Wall Street story. The company story is the one that we care about. Now, here's what's going on at the company. Red Hat sells Linux software and, more importantly, maintenance of that software. Like so many companies, Red Hat has benefited from the corporate move to the cloud, particularly now completed transition to Intel's Atom-based servers. So revenues have grown impressively from $194 million in Q2 of 2009 to $245 million in the quarter just reported. Now, Wall Street, as I mentioned, has bid up the stock pretty good. So sales are up, earnings are up, the stock is up. What could be the problem? Well, the problem might be free cash flow gains. For a while, it looked like Red Hat had more and more profits, and more profits would lead to more and more free cash flow. But those improvements have been a little bit bumpy lately. A careful look at the company's cash flow statements over the last 6 or 7 quarters shows that less of Red Hat's net income is ending up as free cash flow. Now, there's a trick here that a lot of Wall Street seems to be missing. The free cash flow is usually cash flow minus the cost of capital expenditures. But in the case of Red Hat, there's a little weird line item called the purchase of developed technologies and other intangible assets. What is that? Well, we'll get to that. But once you get the proper free cash flow generation number, you start to see the ratio of free cash flow net income is going down, although it improved this quarter, even as Red Hat's profits increase. So as Wall Street bids the stock up and expects earnings growth to accelerate, free cash flow growth rates seem to be slowing down. So in the case of Red Hat, rising earnings aren't turning out to be fabulous free cash flow growth, at least not as much as investors might expect. Emily?
Thanks, Cory. Now let's bring in Red Hat CEO Jim Whitehurst for more on the numbers and his company. Jim, thanks so much for joining us. First of all, your fourth quarter profit jumped. Your stock is up in after-hours trading. Who is buying? Who are your biggest customers?
Well, we primarily sell to large enterprise customers. So as you talked about, we provide a whole series of support and maintenance and features for customers who run production applications, and those are typically large customers. So the majority of the world's equity trades happen on Red Hat Linux because the majority of the world's stock exchanges run Red Hat. Billing systems, telecommunications, financial services have all been early adopters. More recently, we've branched out into airlines and railroads and retail. So almost anyone who's used Linux is well on their way of migrating that over to Linux. And about 80 to 85% of that Linux, if it's paid for Linux, is Red Hat.
So how is the cloud helping you, and which of the major vendors are really driving the usage of Red Hat?
Well, cloud's helping us because other than Microsoft Azure, every other cloud runs an open source stack. And some of those are, reference paying customers of ours. People like Salesforce.com is a great customer of ours. Most clouds, NTT's cloud, IBM's cloud is running Red Hat infrastructure. So we make money directly with those players. But I think as important or even more important than that is enterprises look and think, if I build my next applications on a Red Hat infrastructure, I'm future-proofing it. I know I can move that to the cloud in the future. So one of the things that's provided a lot of tailwinds for us is the fact that we are the reference standard on a whole set, beyond just Linux, a whole set of open source technologies that are driving the next generation of IT architecture.
All right, so Jim, you might have heard my lead into this. Let me ask you, what is the purchase of developed technologies and other assets? What is that line item? Because this quarter looks like it was about $1.5 million. Last quarter, $9.5 million. What is that?
Well, it depends quarter by quarter. Sometimes that can be we have bought literally software and it goes on the balance sheet that way. Sometimes we've bought licenses to use certain pieces of technology or patents, and so that can be kind of lumpy. So if we do a patent agreement where we agree to license someone else's patent technology, we'll pay for that up front and we'll amortize it over time.
But does that mean that the direction of the company might be towards less open source software, more specialized stuff that will help you command a premium in the marketplace?
No, not at all. We fully believe in the open source model. Everything that Red Hat does is open source. In general, and we've been pretty public about it, as have most technology companies, we do not believe in software patents. But software patents exist, and so at times we need to work with some of those companies to license those technologies. But the software that we deliver is 100% open source and under open source copyrights. That's those, we've had a couple of those over the last couple of years, but they're relatively modest in the scheme of what we do. I think the broader your point around free cash flow or operating cash flow, our net income grows fairly rapidly. We generate significant double-digit revenue growth. We then kind of supersize that by also increasing our margins by basically 100 basis points a year. That said, as a growing company, we have a whole set of working capital below the line items, types of things that impact our cash flow. Those are relatively fixed, and so those don't grow, they don't shrink. It's just kind of a constant about $85 million a year worth of cash flow. And so our relative cash flow growth looks lower because you're adding our net income into kind of a fixed amount of $85 million of kind of working capital every year. And so that makes the overall growth rate look lower. But as we guided this year, we're guiding for an acceleration in our cash flow growth rate next year versus this prior year. And I think as we go forward, you'll continue to see that.
All right, Jim Whitehurst, CEO of Red Hat, thank you so much for joining us from Raleigh, North Carolina. Great to have you here today.